Let us also look at some other amendments in the international tax area. For interest payment to FIIs and QFIs under Section 194 LD, there was a concessional withholding tax rate of 5%, which is applicable on interest on government securities and rupee-denominated corporate bonds. This was applicable for interest paid up to May 31, 2015. This period has now been extended to 30th June 2017. Another important amendment is relating to the withholding tax rates on royalty and FTS. Currently, a rate of 25% is applicable on these under Section 115A. Obviously, this rate is subject to the lower rate under the DTA. But what has been done is that this 25% effectively has now been reduced to 10% for assessment year 2016-17 onwards, which effectively means that any royalty or FTS payment which is going to a non-resident, under the Act itself you have to apply 10%, which I think is one of the lowest rates, and in most of the DTAs that India has entered into, the rate may not be lower than this number. Then relating to the GDR taxation, okay. Earlier, the Depository Receipt Scheme 2014 replaced the Foreign Currency Convertible Bond Scheme 1993. Okay. Now, DRS or the depository receipts can be issued against both listed, unlisted, private, public company, and that too for debt instruments, shares, or units under the new scheme. It is proposed that the earlier benefit which was available in respect of FCCB Scheme 1993 shall be available only for ordinary shares of listed company and FCCB of the issuing company. So something which is already specified is what is covered. The balance in terms of the debt instrument, units under the new scheme, etc. may not be eligible for the concessional tax benefit. Another good news is that the provision of domestic transfer pricing, the threshold has been increased from assessment year 16-17 onwards. Earlier, you were liable for this if it was 5 crores. So between two Indian associated enterprises, if there were transaction amounting to 5 crores or more, and which was specified transaction, then domestic transfer pricing applied, and the Indian company was under an obligation to maintain regular documents required under the Act, get a transfer pricing certificate for them as well. This has now been proposed to be amended to be applicable only in case where the amount or the quantum of these transactions exceeds 20 crores in a given year.